Hello, ladies and gentlemen. Welcome once again to Kenne's Talk Show, a place where we make money, we think about the future, and build wealth. You already know what time it is. Make sure to smack up that bell and subscribe button. If it's your first time, welcome, and share with your friends, family members, including every single person you know. Thank you to all the new subscribers. You've found the right channel where you could make long-term wealth. Now, before I get down into today's episode, I would like you to go check out the previous episode. Probably hit a link here or somewhere here. I don't know which one. Probably here or there. Yeah, well, anyways, whichever one you want to hit, definitely go hit that button and let's get down into business. Before I start this whole deal, I hope everyone is doing well with their family and everything. So we will definitely be looking at ETFs because I think growing long-term wealth is just about patience. And today's society, we don't have that patience. And that's something we need to cultivate or we need to build in order to, sustain and grow wealth. So I will get down into this so that we could all see what is going on. One quick moment. Okay, here. Now, if you look at your screen, you would see that we're looking at Vanguard.ca. I mean, I'm still a bit focused on Canada, but we will most definitely check the United States too. But for now, Canada is probably the best because I'm in Canada. And I'm not saying Canada is the best country, but yes, it is one of the best countries in the world. So I don't want to attack the US people. So the very first one we'll be looking at is VDY. Now we're starting with Vanguard, and then we'll be heading down to Bank of Montreal and other ETFs. So Vanguard ETF. Now I'm just gonna pull up the fact sheet for this one. Today is gonna be a really quick video. So if you haven't picked up a pen and paper, just do that right now so you can write this down. And let's quickly pull up the ETF fact sheet and zoom into this and definitely look at it. Now, when I open it up, it looks like it's the banking sector. Okay, the banking sector. As much as I hate banks, they're not going to go away because it's a very regulated sector. It's a very centralized sector, which is kind of needed in our economy, just so that we, have some sort of law and order in the way we govern money in the society. And so when someone takes your money, they likely have to pay it back. And so that's why I think the banks are here to, help in that situation. So this ETF is solely banks in Canada. Okay, when you look at that, well, Enbridge is a gas company, but when you look at this, okay, if you pay attention to this, you could see that we have the Royal Bank of Canada, we have Toronto Dominion Bank, which is also in the United States, we have Enbridge, it's a gas company, a Bank of Montreal, Bank of Nova Scotia, BCE, I don't know what that is, but it looks quite interesting. But then, when we all look at that, you could then tell that, this is a banking sector. It tells you here, that's the financial. Well, it tells you right here, it is the financial sector that constitute 53% of this whole ETF. And so if you're in Canada and looking for like a good ETF to invest in, rather than investing in BMO, investing in RBC, investing in TD Bank, you might as well go with an ETF that constitute all of them. So I'm gonna move straight to the second one. Like I said, it's a really quick, snappy, and fast video. Now I tried pulling this up from the BMO site, but it took me quite a while. But I'm just gonna show you the growth chart on this particular one. It's called ZLB. I don't know, some people may say ZLB, but I say ZLB ETF. So this is what I did on Google. And if you have time, just basically look at it and tell me what you think about it. Now, the analysis I'm going to do, like I said, I couldn't do deep research on this one because it was rush, but quick, hush. I mean, but no rush to put your money, okay, into, stuff that you're not comfortable with. So let's go with the 5-day chart to see what it looks like. Now, the past 5 days, it's been down by 0.048%, and that's 21 cents on the dollar. 1 month, it's down 62 cents, which In the red days you buy, and then in the green days you sell. Well, in the green days you don't buy, basically, because you're holding for long term. Well, if you invested in crypto, in the red days you buy, in the green days you sell. So in this case, it's an ETF. So in the red days, you're definitely selling. Sorry, you're definitely buying. Scratch that. Buying, not selling. You're definitely buying in the red days. And in the green days, you're holding strong and maybe just dollar cost averaging DCA. Now, the past 6 months, you could see. Now, before I always just look at this chart, I do a deep analysis and see if there's an upward trend, if it's heading up. If it's not heading up, most likely it's not a good one. Okay, I can show you an example of something that I feel very skeptical about. But for now, looking at this, the max chart, when you look at this, there's a pretty steady incline as we go up. I mean, but for here, 2020, and then back up and then steady incline. The way it goes up, that's how a chart should look like. It tells me that's very healthy, okay? I mean, everybody understood what happened here, and so nobody should be, everyone was all affected by this. So when I look at this, there's a pretty good steady incline. It's going up. And that's how I determine. And if I'm looking for ways to get into the market at this point, looking at this, I could see this past 5 days, it was down. Okay. When I clicked on it, you could see that it was down. Past 5 days, it was down by 21 cents. The past month, it was down by 62 cents. Most likely, it's definitely going to go up in the next month and a half. Probably ending April, it should be back up by at least 1%. So we're gonna move to the next one. It's part of the BMO as well, but in this case, like I said, BMO, I'm not sure, for some reason they're not giving me like a detailed fact sheet of that ETF, which is something ridiculous. I mean, I've been pillaging their website to try and figure it out, but I still cannot figure it out. So I'll just close that real quick, and then we could move on to the second one, which is I had ZLB, which is ZCN. Some people will say ZCN. Okay. Now when I pull it up, this one looks very good, but the volatility is a bit crazy. So if I'm going into this one, probably a lower percentage of my portfolio will go into this. Okay. But looking at it, it still tells me there's a pretty good steady incline. It goes up and doesn't stop. So it goes up, drops, goes up, drop a little tiny bit, goes up, drop, go back up, drop, and then go back up again. And then it's been consolidating. That tells me it will soon take off again. So if we go and pull the 5-year chart, 6-month chart, you would see that it's a pretty steady incline as it goes up. Now, if you check the 5-day chart, it's kind of wobbly and wonky, but it would do. But like I said, we're looking at down the road, looking at the future. We're not looking at now. And so slowly, steadily, consistently, you can build that wealth. Okay. Now, the next thing we will look at is one quick second. I'll type that up really quickly. It's XMU. I think I had that somewhere. I don't know where I put it. XMU ETF. Oh. Okay. Now, this one, it looks like something I would most definitely buy because it's quite steady. It's quite increasing. And when I look at the 5-year chart, this is the best of all that I have picked today. Most likely the best of all I've picked. The incline is quite steady. It is quite steady. I mean, not very sharp. I mean, the higher it goes, the quicker it goes up, the quicker it could fall. And so when I look at this from here to here and from here to here, you could see that there's an incline. If a stock doesn't look like this, or ETF, not stock, if it doesn't look like this, going up like that, my friends, you have to run away from it. Okay, you definitely have to run away from it. So steady incline is most definitely. Now, for some reason, BlackRock isn't letting me get into this stock. Yes. ETF. Sorry. ETF. BlackRock isn't letting me get into this ETF. And this is ridiculous. Ridiculous, I say. But what can I do? I'll just only show you the charts, and if you can on your end, open that up. Like I said, I was just in a hush. So I'll just quickly show you this. Now, the past 5 days, it's been down 71%. Or 71 cents. I'm not sure what's wrong with me today. 71 cents. The past day, it's up 62 cents. Now, mind you, the stock market opens up at 9:30 a.m. Eastern Standard Time. Yes, that's when it opens up. So by the time it opens up on Monday, it could drop. By the time it opens up on Monday, it could be up by maybe 40 cents or 20 cents. And so take it with a grain of salt. Whatever you see here could be up, it could be down. But most definitely, it's something you should pay attention to. Okay, the last one we were gonna look at was XDIV. Now, this is also a Vanguard. No, whoa, something is definitely wrong with me today. It is what do you call this? BlackRock ETF that is also offered in Ontario and in Canada, the TXE, Toronto Stock Exchange. When I look at this, the 5-year chart, it looks like a pretty new chart, like a pretty brand new ETF that popped up. It came out probably sometime in 2020, and then COVID, boom, it dropped. Well, if you knew back then, you would have just bought. But now everyone was panicking because they never knew what the world would look like. They never thought it would return to normal. But now we're back to normal. So when you look at it, it's just 5 years. And when you look at it, it's a steady incline, in my opinion, because when I look at charts, I can tell that one could be messed up, but this one doesn't look like one. It looks like it's going to grow. And from all indications, it's been up 25% in the past 5 years. Not terrible, not a terrible investment. If you put in 1,000, you have 1,250. So that's an investment that I would go for, even if it took 5 years. And I knew that the bank would give me $25, not even 5.99 cents monthly on my 1,000 sitting there. So this wraps up our episode for tonight, ladies and gentlemen. If you have any questions, you know what to do. Feel free to drop that thing in the comment section. And don't forget, you already know, building wealth takes consistency. It takes that patience, that I want to do it, that dedication, that power, that mentality. You need to be strong, because if you want to make it, you have to fight for it. There's no easy come, easy go. No, you have to make it. Don't make grand opening and you do a grand closing. Nah, stay consistent, build, struggle, work towards it, and you would earn it. Like I said, making money, it's a marathon and not a sprint. The quicker you sprint, sprinting is good for the heart rate and stuff, but when you sprint in this context, when you sprint, you're not going to make a lot of money. So consistently build wealth, and I can hold your hand into building that wealth. Now, in one of the videos, I was going to say I am looking for 4 or 5 people. Drop it down in the comment section that I could mentor you. More specifically, if you're in Canada, yep. I would love, young ages, anyone from ages 30 and below, yes, I could put you or set you on a better path. We never know. I'm here for a reason. Everybody's on earth for a purpose, and my purpose perhaps is to help people. And I feel that's something I learned as I was growing up. And so, ladies and gentlemen, without everything has been said and done, you already know what time it is. Make sure to smack that damn button, smack the subscribe button, share with all your friends, family members, including every single person in your household. You already know what time it is. Your boy Kenny is out.